All right, everyone. Welcome to the second week of the Thursday night classes. So I'm just going to start this and kind of just get into it right away. I don't really want to hold any of you guys up at all. So bear with me as I do all this typing stuff again. Why are these letters so small? We'll see. Yeah, this is not gonna. Are these letters small for you guys too? Something's not going right. Oh, that's a little bit better. So this week we're gonna be talking about lowering your risk with options. And basically, like the main thing I want to talk about with this is just the overall perspective of a lot of people trade just to make money. And I get it, like that's the whole idea of what we do and how we do it. But I'm like extremely big on the fact of the matter, like if you really actually size correctly and just wait for the correct entries and actually take your time with this, there's not really a risk with anything you do. Obviously, you can lose money. You can actually like lose your port if you don't size correctly. But overall, the whole purpose of trading is to have favor in your like direction. You don't want to put something out there where the risk is so big and the reward is so small. If the continuation happens, if the bounce continues, if the breakout continues. So I'm going to be focusing on the whole perspective of basically success in your favor compared to just hoping that you make money out of what you do. So just to start off with this, I'm going to briefly touch on this, and I have visuals I'll show later in this session, but I don't want to pull these up right now because I will have to pull the whiteboard away. So we'll get into that at the end. But I'm just going to talk on this for a while, and any questions you guys have, just throw them out there as I talk, and I'll answer them as soon as I see the questions. So basically, predetermining a trade scenario. A lot of people, when you talk about this, they're not even focused on. I'm going to make this bigger so you can see it. Don't worry. So basically, predetermining a trade. The biggest portion of what I focus on before I enter a trade is literally looking at the chart, not just the actual stock chart, but looking at the contract chart. A lot of people, they just focus on the stock chart. Like we're approaching a heavy support. I'm just going to enter off the contract. I see the bids at 1.00. I see the ask is at 1.05. So they're really focused on like the current right now. This is the price of this. This is the price of that. And what I try and do, I try and look at the actual prices with the contract chart pulled up side by side. And like I said earlier, I'll have a visual that really gets into this. But I'm not, when I first started trading, I was so focused on the overall picture of, okay, we're at a heavy support, bids at $1, the ask is at 105. I'm just going to try and fill out the ask because I know that like if the chart holds this support, we're going to bounce and this call is going to go up in value. So what I do now, I'm focused on the actual contract chart side by side with the stock chart, more so for a mirror image to see like how much of a fluctuation has happened from an hour ago when it was at the same support. How much was that contract an hour ago before like where it is right now? Because hypothetically, a contract can be, let's say, 1.2 an hour ago at the same exact support going off the stock contract. So we're focused on the overall idea of, I'm just going to use a simple example, and these numbers are not going to be too accurate. So don't think that this is going to be like an exact, like, oh, Amazon was exactly at this price per share. So let's just focus on Amazon being at $98 a share. Let me put that in here just so that people that watch this recording don't get confused. So Amazon's at 98 a share at this support zone. Say this was at noon at 12 o'clock. So I'm focused on this looking, okay, so if Amazon was at 98 a share at 12 o'clock and the bid is at 1.00, what was it at the hour before at 11 when it was at the exact same support on the stock chart at 98? Because if that price was 1.2, 1.3, I can easily tell that, okay, if this pushes up, the value is going to increase rapidly. Since an hour ago, we're already down basically 20, 25% from the previous price of this contract. Lowering that risk, and like it's a good visual for you. And like I said, I'll have a picture later that actually show this because it's kind of confusing to like see it in your head when I'm just talking on this. But it's the idea of like correlation. If you enter this chart, like this contract, say the ask at one. Someone that sees the whiteboard, can you explain how to pull it up? I know I had this issue last time with people that couldn't see it. There's like a button you have to push or in like the bottom right-hand corner. If someone could type that in the chat. Johnny said you can zoom out. Let me know when you get it and I'll continue talking. I don't want to leave one person behind. Bottom right corner, it says zoom out. And you guys are helping me with this too. I don't use whiteboard that much on Zoom, so the sooner we figure this out, the better it will be years down the road. He said it's all white. Let me see. Huh. Are you on see if you're on the whiteboard for slide 1. Go to slide 1 if you're able to switch through 1, 2, 3, or 4. My bad for everyone that I have to wait for a sec. I don't want to leave one person behind. I'm pretty big on like a whole group staying together. How do I change slides? So like as I change the slides, you'll click on the bottom right hand corner and it will say like slide 1, slide 2, and you'll just click on it. Right now I'm on slide 1, just the first one. And if this is going to be an issue moving forward, I'm going to start using others. Don't feel bad about delaying. I don't mind staying an extra 5-10 minutes to make up for this. I see the slides, but all white. Once I finish slide 1, let me know if it does the same thing when I switch over to slide 2, because I'm going to wrap this up pretty soon. My bad for this error, Jose, my bad. But yeah, like just to sum up this whole idea, I try and focus on like the overall option premium chart that correlates with the current support and or resistance on the stock chart. I try and see like, okay, if the support holds and it bounces up, say 50 cents a share, how much was that move an hour ago when it had the same move up before it came back down? Because then if I know a 50-cent jump on the stock chart put this contract up 25%, I'm expecting 15% gains if I have that same move, 20% gains. I'm not focused on, oh, I want 50%. Well, what if the previous jump before it rejected only went 25% on the stock chart? And then when you're on the option now, it stops at that same exact spot. And you're looking at the percent, the money amount. You're focused on, I want to make 50%. I want to make 40%. If you look at the correlation from what just happened an hour ago, you can find out a good estimate of, okay, I'm guaranteed 20% if this bounce goes back to the same rejection and I can trim there, I can sell the whole position. That's one of the main things I focus on when I trade. And I look at like the mirror image between an option contract and the actual stock chart. And for people that just came in, I'm going to show a visual of this example with Netflix today to give you like a good idea of how I do this live and not just like me talking like I am right now. Jose, I'm on slide 2 now. Everyone else slide 2. Let me know if you see slide 2 or if it's blank. And once again, if this doesn't work like I expect it to, I'm just not going to use these slides again because I'd rather use a PowerPoint if it's going to be easiest, or just use a plain PDF document, just type on there. But yeah, I'm on slide 2 right now. I'm about to type something right now, so let me know, you guys. So we're going to move into the whole idea of just, and once again, the words are going to be small. I'm not sure why it's doing this week, but it wasn't last week. This whole thing is just complicated. I can't even pull this over now. Slide 2 is blank for me, but slide 1 has written text on it now. Okay, I don't know what's going on then. I may switch to a PDF just pretty soon because I'm having issues on my end as well. If you guys hear me, how many of you can actually see slide 2 on the chart? Can't see anything, just white. So I'll be looking at the whiteboard. Yes, I'm able to see. Still only seeing slide 1. Can't see. So the bottom right-hand corner, it should let you switch to slide 2. You may have to scroll in while on the board view. Do you guys see it now by any chance? I can see slide 2. You just got to scroll. Yes. Let me know if you guys can see any words on the screen right now. Oh, gee, that's not very good. How do you switch pages on mobile? If anyone has mobile, how do you switch to the next slide? Yeah, with all the issues that we're having, I'm probably just going to start using a PDF or just an actual PowerPoint slide and just have topics on them. That'd probably save a lot more time. And my apologies for anyone if this is their first time out of these classes. We've never had this issue before. If anyone's on mobile, how do you switch slides on the whiteboard for this? I see an arrow, but it won't change the slide. Oh, geez. How do you guys feel on me switching to a PDF real quick? Everyone cool with that? Yeah, everyone's saying yeah. Okay, I'm going to switch to a PDF real quick. So I'm going to stop sharing my screen. My apologies, everyone. Actually, I may not need to stop sharing my slide. Hang on, let me see if I can just do it this way. Hey, give me. I'm gonna stay a little bit over the 9 p.m. cut time. Don't worry. I apologize for this. I gotta get this off my screen. Give me 1 second to pull up a PDF real quick. Oh, where are my PDF documents? But yeah, while I'm trying to switch over to this, if you guys have any questions while I can talk and do all this, it helped me not feel as bad for wasting your guys' time right now. I'm trying to figure this all out, just like how you guys are here just watching. Google Docs. Okay. You guys just see the screen I'm sharing is the background, correct? With the Rippy Global Academy. That's what you guys see right now. Okay. Appreciate you guys answering quick. Saves me a lot of stress right now. I'm getting this PDF pulled up right now. My bad, everyone. Okay. Pull this out. I gotta make sure no information's on this that you guys can take, my email or anything. I think we're good. Okay. But why is everything so small when I do this? There we go. You guys see the PDF? Or you still see the background? I may have to share the actual PDF screen instead of just the background. Let me know what you see on your screen that I'm sharing. I see your screen, so you don't see the, I have to share the PDF then. Give me 1 second. Oh, we can see the PDF. Okay. It may be delayed then. Let me type something just to make sure that everything's flowing because it looks like my screen's a little bit delayed. Yeah, this is starting to irritate me now. I can see the untitled document. Okay. Yeah. So you guys see the document. That's all I need. I'm just going to type on this and use this instead of the whiteboard. The whiteboard's just not correlating. For some reason, my screen's not loading fast. This is the first mishap we've had. Everything was going so good the last few classes. Yeah, my screen's just frozen when I share the Google Doc like this. Do you guys mind if I just talk and not have words on the screen? Like, does that bother anyone at all? And if it does, I'll make a PDF document I can share in the actual Discord for you guys to look at afterwards. Let me know what works with you because I don't want to. What is the full port class? I will not teach that, but I'll teach you risk that's minimal. So if you want a full port, you at least know what you're going to be risking. I will teach you that. Whatever is easiest. Well, I'm kind of irritated with this, so I'm gonna try and get this to go away because it's not even loading. My apologies, everyone. I know it's not my fault directly, but I'm not sure how to make this work the way I should. For some reason, I can't even exit this out now. It's just loading slow. But yeah, while this is loading, I'm just gonna, so the next thing I was gonna talk about was just becoming aware of your emotions. And I know what's this guy's name in the chat that said this? Jed, you said a thing about the full port class. So managing emotion, I'm just going to touch on this while this screen tries to catch up because I don't know what's going on right now. The hardest thing with almost every single trader, and I fall victim to this even to this day. I don't want to speak for the other admins and the mods in Rippy Global, but emotions take over. And it's not really the fact of like, I don't have emotions. It's a fact of like, I know that I have them and I can't fall victim to making an action I know is not right in the moment. Everyone has that thought of like, I want to go all in. I want to play here, but I know my risk is so max. Like, I know I'm not going to make money guarantee because it's just chasing, or like, I just don't want to miss out on this move that's happening. I have these thoughts every day, but it's about fighting that like discipline you have to overcome the idea of doing it. You can't just fall victim to it because one slight mess up of oversizing, taking a position that you know you shouldn't, it can wipe out your port, and more importantly, not wipe out your money, but just wipe out your mindset. Because one loss, it's going to carry over into the next trade you have, the next day that you trade. It all just depends on you. And then it's just important, like, are you able to sit and not trade? This is one thing that I talk about so heavily. Like, I'm so passionate about people succeeding. I don't even care if you make $5, like, you're making progress. Can you sit there and not trade? A lot of people that I know personally can't sit down and not trade. So they have to leave the setup. They have to close the laptop. They have to turn their phone all the way off and not do anything. That's just how they are. Now this is doing something weird. But like, it's just the whole idea of knowing, like, are you disciplined? Do you really take action with what you say you're going to do? Or are you going to follow through with it? A lot of people say, like, you hit a trade at like open, and then within 30 minutes, you're up $100 on the day. I don't care what size your port is, $1,000, $10,000, $500, you're up $100 in the first 15 minutes. I don't know many jobs that pay an hourly wage of $100 in 15 minutes, let alone an hour. So why are you sitting there trying to get another trade in? Are you able to sit there and just observe what's going on and not force anything out of your pocket that you know you shouldn't do? And I tell people all the time, it's fine to sit there and not do anything, but you have to realize there's nothing to show here. Bro, what's going on? You're in control of everything you do when you trade, and the only person that you have to blame is yourself. That's one thing that, like, I fall victim to that. I enter a trade, the market does what I didn't expect, and I'm just like, the market ran, it shouldn't have done it. End of the day, what did I do wrong? Like, what do I have to work on or change about me to not make this happen again? Yes, the chart didn't do what I thought it would. Historically, it rejects, but it broke out. I get that. But what did you do to make your emotions say, like, I can't do that again? Or this was a horrible day. Did you oversize? Did you enter when you know you shouldn't? There's always something about what your actions portray that you need to work on. Even a win trade, like, what did you do good that you have to do again? What made you take the trade? Like, what setup was there? What made you want to do it again? Like, repetition, all that kind of stuff. People are starting to say stuff. Hang on one second. Honestly, that's the hardest part. Yeah, sitting on my hands. I mean, even me, I'm able to sit here now and not care, because my focal point is, today was Thursday. I had a red trade before noon. I tried to play the reject at the Wednesday high. I got screwed. I sized light. I still lost. But the idea was, I was sitting there watching this go up, up, up. I was not buying calls, because I knew if I wanted calls in my risk favor, I would have bought them at open at the low on the day when it kept, I think it was like a triple bottom, had a double top, and then it finally broke out that third contest on the upside. I knew from my mental perspective, if I got calls at the high and I lost, I know why I lost. And of course, if I win, continuation just took over, and it wasn't my actions that made me money. It's just the fact the market kept going in the favor I was hoping for. So I'll sit there and just process the idea. Okay, if I buy here and I make money, did I really make that money happen? Or is it just, oh, continuation happened, the breakout happened? I get the fact of, like, you make money on the trade, but honestly, think to yourself, is this what I have to do every single day to make money? Am I going to buy the breakout and every time it's going to go upside? Because at one time it doesn't, you're going to question the very next trade that breaks out. What if it doesn't go upside like my last trade? That's why I try and stick to the same buying technique every single time. Because that way, if I lose, I know it was my fault, but the chart didn't align like it should. I buy the same pattern, the same setups, the same trend lines, the same zones. I try and follow the same thing every trade. That way, when I lose, I have something to look back on. Like, that's the whole purpose of this. Perez said, bro, today was a perfect example of the catalyst changing everything in 5 minutes. Yeah. Stuff that comes out quickly can always push stuff instantly. I know something with I know Meta, something with TikTok came out about someone buying out TikTok, and Meta just had the biggest push ever. And I know they pushed end of the day, and I was charting in the Discord about all this. Oh yeah, yelling. Yeah. She says, repeat what she said for me, because I know she said something, but I didn't really dig into it very much. I know it was something about the banks and the buyouts and everything, supplying money for the banks. And I know people that put their money in the smaller banks are starting to transfer their money to the larger ones that are actually in more trouble, which is going to take out a lot of the smaller bank systems. Yeah, nothing's loading for some reason. I'm trying to get that chart pulled up from what I talked about earlier, but for some reason it's not coming up. So has anyone here heard about FinViz, the heat maps that shows you like what the hottest sectors are on the day? Anyone heard about that? And if not, let me know, and I'm going to try and get a chart pulled up to show you what that is. It's It's called FinViz. It shows every sector. I think there's 11 to 12 sectors in the US market: energy, technology, communications, real estate. Okay, I'm gonna try. I have a screenshot, but everything else has kind of been messing up. So let's hope this pulls up on my screen. It's very small. I don't want to zoom in and it disappears again. Is this hard for you guys to see this picture I pulled up on the screen? Are you able to see that? Yeah, I'll explain how to work it for sure. Is it visible? Like, are you able to actually see words on it, or is it super zoomed out? Oh, wait, you guys can see this good then. Okay, bet. Yeah, so literally the way this works, the biggest Coochie, I'm gonna say what you just said in a second. Oh, you guys can zoom in. Okay, but I didn't know if you guys could zoom in or not. So literally the way I'm gonna explain how I use this, and I'll explain the overall picture of basically what it does. So basically, when I'm looking at this, I watch this every morning. And obviously I have the individual sectors on a separate watch list that I use for charting. Like I have technology, communications, the consumer discrete, consumer I'm trying to think of the other name, healthcare, financial, the industrial, real estate, energy, utilities. I have every single one on a watch list, and I'm peeping pre-market. Which one's up pre-market? Which one's down pre-market? Market open. Like what's moving with S&P, whichever direction that's going. Usually I try and find which sector's hot on the day. Then I'll find within each sector what's the hottest stock, what has the highest volume. I'm focused on the overall picture within these things. I'm not looking at like, oh, I look at Apple every day. I look at Amazon every day. So I'm just going to trade those every single time. That's fine to do. But when I have a list of one stock from every single sector, I want to see which sector is hot on the day. If energy's up and every other stock is down, well, if every other sector is down, energy is the only sector that's green. I'm not going to focus on, okay, I got to play puts on energy. My first thought is, okay, energy's green. Let's see if this is going to continue on the upside. If the overall market stays weak, maybe all the volume's flowing in the energy sector. So that's why the only energy stock I look at is XOM, which is ExxonMobil. I'll literally go through that watch list every morning, all of those sectors, which one's hot on the day. I'll write it down. I'll separate it on the watch list so that I'm only focused on the hots on the day. If I see one specific sector like communications is down, I'll look at Google, I'll look at Meta, I'll look at those stocks and see, okay, if we continue down, I have to find that the rejection on resistance to play puts on the downside, because you want to focus on continuation within these sectors. A lot of sectors will open red and they'll go green on the day. You don't want to focus on, okay, it's red, I have to get puts. Maybe it's red, but it's at a support zone. You can catch that move before the sector goes green on the day. So if you're playing energy and energy's red, but the ETF for energy, which is XLE, is at a heavy support zone, say ExxonMobil is slowly starting to curl and you see the energy sector start to pump up as well, you can work your way into that trade playing calls on XOM before the actual volume and people chase, buy into that, and that stock starts to rise up. You can catch it before the move happens. Because I promise you, once these breakouts hit, continuation's going to go. You're already up 50%, 80%. Put a stop loss at break even, do your trimming, leave a runner and let it go. Because at this point, when one sector's hot and the rest are bad, the filtered volume, the filtered money from the big boys, they go into these sectors and they will play them out and then they'll sell it off a day or two later. Yeah, so the energy ETF is XLE. XLE. XLF is the financial sector. And if you guys want, so literally, if you want to get this heat map, it's finviz.com. And then you just find the section that says the heat map. And I'll type that in the chat right here. I got you guys. So literally, when you go to Google, just type in FinViz, and then you'll find the heat map on the website. And every day, like you'll see this every day. I have this URL literally on the background on my laptop. So I just click on the link right there on the background and it's pulled up within 5 seconds. So I don't have to go to Google. I don't have to type FinViz. Like I'm literally one click away from FinViz. I'm one click away from everything. Every link that I use when I trade is on my background. So I'm just clicking the links and I'm there. I don't have to go to Google, type all this crap in it. It just takes too much time. I'm trying to get to it as quick as possible. And so I'm going to explain this from like the overall perspective. When you're looking at this, and I'm pretty sure you guys can see my mouse. So if you're looking at technology sector, everything is red except Apple. The first thing you should be thinking about, okay, Apple's green. Like, let's check the daily volume. Let's see if it's hot on the day. Is the SPY red and Apple's green? We've seen this happen before if you've been trading for a while. Apple can be up 2%, 3%, and SPY or the S&P 500, it can be red on the day. That's when you want to focus on, okay, Apple could be on a breakout. And if the next day the whole market's green, Apple's just going to continue that tear on the upside. That's just how it is. It could be red, but you want the risk and reward in your favor. So going off that, Apple's green, SPY is red on the day. The very next day, say SPY's pushing and Apple's still green. Ride that momentum, because you don't want to just focus on, okay, the whole sector is red, only one stock's green, I don't want to touch it. If everything is red and one stock is green in that sector, where do you think the money's going? It's all going to that one stock in that sector. No one's going to pump money into Microsoft if it's down 3% and Apple's up 2%. People are going to notice, okay, Apple's green, I'm going to watch it. I like that thinking, noted that. Yeah, definitely. I mean, everything I talk about, and I'm going to repeat this throughout this whole course, a year from now, 2 years from now, I speak on personal experience. I speak on stuff I've done and what's worked for me, what hasn't worked for me. I'm going to tell you what hasn't worked for me. It could work for you. I could tell you what worked for me. It may not work for you. I'm speaking on personal experience and what I've actually done, what I actually do every single day. I'm going to talk about this day in and day out. Everything I talk about, mindset, losing, winning, how you should handle a trade, sitting on your hands. I'm speaking on my experience with everything I teach. That's just how I do this. I don't want to lie. I don't want to portray an image like I'm some perfect person. I mess up, and I'm going to live up to that, because if I don't learn from that mistake, I'm not going to grow as a person, as a trader. You guys need to realize that too. When you lose a trade, don't just close the laptop and walk away. That's the biggest part of lowering that risk moving forward. Learn what you messed up on and change that before it's too late, because one loss is going to pile up. You know how bad habits are. That one bad habit, it's going to keep coming, keep coming, keep coming. You got to break that habit. So I use FinViz just to get the overall perspective. That, like, the market sentiment is so important. Like, you can't just open the stocks and just start trading. Like, where are the zones at? What's hot on the day? Is every sector red but one's green? Is one sector red but everything else is green? Maybe you want to play puts on that one red sector, find the individual stock that maybe has less volume than usual. Like, it's just, you figure it out as you go. You're not going to get this all one day. It's literally impossible. I'm still learning. I've been doing this for 4+ years. Like, every day I'm learning. Every day I'm trying to perfect what I'm doing. I lose and I readjust. I win, but I still readjust. I want to make sure I do this consistently at a successful rate. That's why I'm doing this so often. Yeah, and then within, like, this is the biggest thing. I think I may have touched on it, but I just want to repeat this. Look for the biggest percent gainer in each sector that's green on the day and that's red. A sector can be red, but an individual stock within it can be green all by itself. Focus on that and use it. Don't take advantage of it. This is literally free. You just go to finviz.com. You can see every major stock in each sector. Like, you literally, like, I'm looking at it right now from today. Apple, it was up 1.87%. Microsoft up 4%. Google was up, what is that? 4.6. Meta was up. Bank of America was, I can see it right here. I don't got to search the stock, like type in the symbol, find the chart, look at the percent it was up. The major companies will be the biggest ones in each sector on this display. You can see it visually so easily. Tesla, Amazon, Walmart, you see everything right there. One click of a button, you see it all. I'm going to try and get this. I really want to get this other visual pulled up from what I talked about earlier, because a visual with talking helps a lot. You guys may have to zoom in, but is this readable if you zoom in? Let me know real quick before I start talking. I know this is going to be like very small unless you can actually like make this fit on your screen that you're looking on. So a few people give me a heads up. Just let me know if it's clear. Are you able to see this chart with Netflix? It's a side-by-side display. Okay. For everyone that may not be able to see good, just zoom in on the picture, and then I'll talk about this just to explain. So the first thing I talked about, for the people that may not have seen or that couldn't even see the whiteboard since it was messing up pretty bad, but it's basically like predetermining your trade scenario. Like, literally you're looking at, so obviously you guys can see my mouse, I'm hoping. So the left side is, this is literally Netflix stock chart. This left side is Netflix stock chart. So for those of you that didn't see, I posted a like pre-trade scenario in the Discord and the trade discussion. I literally told everyone, like, I'm looking for Netflix to drop down and open to 302 level to hold support and then break out on the upside. Now, saying that, I'm going to give like the disclaimer. I did not take this trade because the first drop that happened where I have this red highlight, I was looking for a drop to like the 1.1, 1.2 area. And it looks like I cut out the contract price on the right side, but the contract on that dip went to like 1.3, 1.34. So I'm speaking on what I've messed up on. So you learn from it in case you've had this happen. We can talk about this, ask questions as I talk about this. We can discuss right now. This is perfect. When I saw that my expected limit didn't hit, but the share per price of 302 barely touched, I didn't want to execute. Like my process was I want to enter at 1.1, 1.2, 1.3 area, or a 1.1, 1.2. That first drop only hit 1.3 on this Netflix 310 call. So right away, my mind's like, I missed it. I don't want to look at this no more. It's whatever. Literally, if I would have kept watching Netflix for another, 45 minutes, it held that support right where that red highlight was. When it had that second double bottom after the push above VWAP, this yellow line is the VWAP for you guys that may not know. That push off that yellow or the red highlight broke the VWAP and came right back down. The contract price was the exact same when it had that double bottom. So after it had the double bottom, it pushed back up above VWAP, and it literally had a double top above VWAP and pulled right back down. If I would have been watching Netflix when this happened, this triple bottom where the white highlight is, I would have gotten filled on my limit that I literally had set at 1.10. I literally had a limit at 1.10. The low on this contract hit 1.01, if you can see that. If not, that's what that number says, 1.01. It held the support. And at that point, if I would have entered at 1.1, it dropped to 1.01. I'm not even down 10% on this entry. And it still held 302 on the stock share price. If I would have filled this and it would have broke out, well, obviously it broke out. It rejected VWAP on the first push, pulled back, made a higher low, and it never touched 302 on that next low. Once it went above VWAP the second time, it triple topped and the pullback held VWAP and it just took off. Netflix had that push I was looking for. And sure enough, this contract for the high of the day, I think it hit like 5.3, 5.2, literally in just under 500% gains on a stock where people were stressing about like there's no market movement. Obviously, the S&P took off midday, but if I just would have focused on this stock after my quote unquote missed entry when the first dip happened, I could have made, like this was all I was watching it open. My day would have been done. Runners would have been going. I could have trimmed it 1.5, 1.6, 1.8. Stop loss at break even. It never would have hit the stop loss after I entered. Why was 302 the level? So let me pull up my Webull and I'll just show a visual. I should have had the actual larger time frames pulled up for this. And hopefully it doesn't go on the main screen so it takes away this picture. But yeah, so literally like 302 was a historical level for me, and I'll get into the charting section of this since this is kind of important for how to lower risk and everything. And we'll see if my Webull even pulls up to show this charting. So I'm fingers crossed right now, but I'm going to keep talking on this until I get this pulled up. So literally, like after that third triple bottom happened, it held 302. I get it. It wicked below. It went to what? 301.71, 301.70 a share. It never broke below and held. It wicked, came back up, wicked, came back down. I'm not even down 10% if I entered at 1.1. You're not going to sell if you're only down, 9%, not even 10%. I get the idea of like, well, how do you know if you're going to hold this a lot longer? Yeah, liquidity grab. People were buying this up. My risk was small on this if I would have focused because I knew from the past two bottoms, it pushed. If I size one contract at $110 a piece and I'm down, like say, this is how I put in perspective, like the idea of like comprehensive of predetermining a trade. Say you enter this trade with one contract. And before you enter, you're saying, okay, the max I want to lose on this contract is $50. So if you grab one contract, your sell is going to be around 0.6 a contract. Obviously, this contract never even went past 100 a share or 100 a contract, 1.00. You're not going to sell this unless it actually drops to your quote unquote, my risk is $50 for this $100.10 position. Say you size 3 contracts, which is going to be $330 total. If you still only want to risk $50, your sell would be around 0.9, 0.92. That's your sell limit. Even that price did not hit on the contract. You're not losing that $50 because at the most you were down just under $30 a contract. So like, does everyone understand like how I think about this? Before I enter, say I did enter at 1.10. I don't want to lose over $100 on this trade. If I size one contract, it's going to zero. I'm happy. Does that make sense? If I size one contract and before I even enter, my thought is if I lose $100 on a position for this, I'm fine. I can size one contract, it goes to zero. I'm happy. Say I want to size $500 and my mindset is, okay, I only want to lose $100 on this. You can't hold that to zero because you're losing $500. Find the percent in your head. Literally, when this triple bottom was happening, I would have had time to think this through. Okay, it pushed up, came back down below VWAP, double bottom, pushed back up above VWAP, double topped at the high, came back down for a third contested support and held the level I wanted. It literally would have filled me perfect. So if I'm sizing $500 and my risk is 100, I don't want to lose 20% of this trade. My sell point would be roughly 0.85, 0.90. That's my sell because I've planned ahead of time. $100 is my limit. I don't want to lose 20% or more. You have to focus and discipline yourself to sell when it hits that point, if it does. And if it jumps back up, you can't be upset. Because if you are upset, what are you doing this for? If you're upset you sold early when that was the plan, you can't size that heavy. Size down to $200 and hold it to 50% loss. That's when you readjust. That's when you figure out, how can I make this easier for me without my emotions getting in the way? This was a simple trade. I mean, one contract at 110, if you held for high of the day, $100 in the 500. If you have a $200 account, you just doubled your account, tripled your account off one contract. Raise that stop loss as it goes. This is a perfect example of if you give space for a stop loss as the stock runs in your favor, you're not getting stopped out until it finally hits the high and has that actual pullback. So with this hitting 500 a contract, say you stop at 400, you are guaranteed just under 400%. If you ask me, that's pretty damn good. Pardon my language, but just like, I get upset about this stuff because people are so like, oh, I trimmed it 20%. Okay, that's fantastic. But like, did you put a stop loss in? Like, if you're happy with 20% gains, you plan for that. Your emotions can't get upset when this keeps running. You're like, oh, 100% I could have held, 200%. Oh, I could have held. You chose to sell. So when I have runners that go, I place that stop loss. If it hits, I did that. My stop loss came down. The chart pulled back. I didn't forcefully sell under my own power. My stop loss got hit because sellers hit, the stock dropped, premium dropped. I can't get upset about that. But when I physically push that sell button, I sell market, I sell the bid, the ask. I get so emotional about, man, if I just would have put a stop loss in there, it could have ran higher. I would have been fine. If it did pull back, at least it would have locked in like a guaranteed like this amount. Do you generally recommend wider stop losses or more contracts with tighter stop losses to allow for trimming? Maybe a better question is, what are some ways to make that decision? So, Alex, the biggest thing this is all personal opinion. Other traders will have different stuff. They'll say size for zero and just hold it. They'll say don't use stop losses, just let it run. What I personally do, if I'm sized extremely heavy, I'm talking like for this position for Netflix, say I size 20 contracts. So it's basically $2,200 at my 1.1 entry. I will trim 10 of those contracts, maybe 20%, 30%. So I'm locking in right away, basically $200. Because if I sell 10 at 20% for basically a $100 contract, I'm locking in 20% right there. So that's $200 I'm locking in. My next thought process, I have 10 contracts still. My position is 1,100. I'm up $200. If I put a stop loss at minus 20% on the 1.1 entry, my trade is break even. The overall trade, I lost nothing, I gained nothing. If I put a stop loss at break even on this trade, I'm locking in $200. I'm guaranteed $200 if I put a stop loss on the remaining 10 contracts at 0% gains. Next question. And obviously this is something that may follow up. How do you know when to trim the rest of the 10? Like, how do you know when to trim 5? How do you know when to sell the rest of it at all? Personal opinion. I can't tell you what to do. You can't tell me what to do because it's just what you feel in the moment. Are you content with 50%? It may not go to 100%. Are you content with 100%? It may not go to 100%. When do you really want to sell and you're content with what you just did, no matter how high it goes, 500, 1,000, 2,000%? That's where people get destroyed moving forward. Their hopes of hitting another 100% gain, or their hopes of hitting their 10th in a row 10% gain. You can't keep like an image of, I have to keep this success. I have to keep this specific percent gain I just had. It's screwed me so many times. I know other people that I've helped that it screwed them so many times. I know actual traders that signal that have screwed them so many times. Don't keep this image of like I hit 20% 10 times in a row. I have to keep doing it. Sell at 10% gains. Take a 5% loss in case it goes to 20% loss. Like there's nothing wrong with losing or making a small amount as long as you're learning and you readjust as you go. When I trim, I leave runners and put like I leave 2 at the very end, stop loss, break even, whatever happens, happens. If it hits 100%, I'm usually fine with 100% gains on a position. I'm not really selfish about, oh, I'm going to let it go to 500% because this Netflix play, I mean, I told one of my buddies, like, this is going to hit 310 if this level holds. If 302 holds and we break out above the previous high, we're going to touch 310. I literally told him that word for word. And sure enough, I never took the trade. I had no evidence of what I said from a trade entry perspective. So I don't want to speak on that. I don't want to speak on, oh, I said it. I told you so. I have no execution to prove that I actually did this. I didn't trust myself. Why do I want to brag about, oh, I said this and look what happened? So I'm focused on, okay, next time the setup happens, I need to be so disciplined that I take this trade. I need to force myself into this, even if I lose, because what I just missed out on, it hurts more than entering the trade and losing. That's the biggest thing. And I'm pulling up the Netflix chart right now for the person that said, why was 302 a heavy level? So let me get this pulled up real quick. Do you guys see my chart for Weeble right now? Let me know in the chat if you see the chart. Okay, one person said yeah, so that's good enough for me. And I got to readjust this because my stuff is so out of whack right now. Give me a few seconds. But yeah, I'm going to just talk while I readjust this. So literally, like when you're entering a trade, figure out beforehand, during the trade, even after the trade, what can I do to like make this simpler? What can I do to keep my emotions out the picture? My entry was amazing, but what can I do to make it better? My entry was obviously a 1.10, and it was perfect. Literally, if I would have just executed the stupid trade, I could have made money no matter what. I mean, obviously I was down just under 10%, but I will never sell that low when I literally told myself 302 is going to hold. It's going to, if it bounces 302 and breaks high of the day, 310 is coming. Like I literally was telling myself this, and sure enough, look at me. No entry to prove that I actually like would listen to myself. Okay. I'm going to delete a few of these lines, but we're getting a little charting session in right now. So first, for anyone that doesn't know, I always start with the larger frame. So I'm just going to show you what I look for in the larger before I get down a little bit. So literally, the reason I was watching this yesterday and today, I had a little trend line right here. And if you look at this, when I zoom in, this was open today. We broke out in pre-market above this. Now that the stock is above this line, this is a support trend. Can you show what your stop loss would have been if Netflix trade went against you? Is that a percent? Yeah. So as I explain this on the upside, I'll talk about what I do on the downside because I did have a sell level that I would have sold on. But like I said earlier, it's not literally like I'm down so-and-so percent, I have to get out. You're figuring out before you enter, okay, my max loss is $200. Like mentally, I can't stand so-and-so amount to lose. If I enter one contract at this price, where do I have to sell percent-wise to make sure I stick to that mental? Yeah, okay, yeah. So you get that. So literally pre-market, Netflix finally broke above, which when the stock's below this trend, it's a resistance trend that's trying to break above. Once it breaks above, that trend is now support. Pre-market, it broke above and held. So I literally was looking at, okay, the trend is above. I mean, the trend's below, the stock's above. If it can hold this support trend, it can take off. So the larger picture, I'm looking at this trend. It wicked above a few times, came down. Obviously, people will say, well, just put the trend on the actual tick, like at the wicks. You can't do that. I'm looking at where the chart actually touches a trend I put down the most. So I can even move this up to this day right here. There we go. And then bring this down just a slight bit. It's like right here. It taps out 1, 2, 3, 4, and then the day 5 times. So literally, I'm focused on it broke above. Okay, what's a zone if it pulls back that may hold? I'm looking for a zone now. Overall, I know the trend is breaking above. So I'm looking at the 10. I'm going to go to the 15 minutes. I don't use the 10. So the 15-minute, literally, I used the opening high from yesterday before it had the pullback, and it broke out to a higher high for the high of the day. So you literally could have put this line anywhere. You could have put it the wicks on the top, the filled candles right here, anywhere in this zone. People that have been in the charting sessions when I do this, I don't put like, 302.56, 301.92. I'm focused on a zone and I'll put a line anywhere in that zone. So I have a visual of like a zone. Whoever is unmuted, you might
Ok.
mute.
¿Te seguiste, pollo? ¿Te seguiste, pollo? Sí.
If you're unmuted, can you mute yourself, please? So I'm focused on the overall zone. So for me, with the wicks on the top right here, the first high of the day on Netflix before it had the pullback, and then it took off to a higher high to hit high of the day. This first tap out around noon, 302.6. The bottom is around 301.8. So it's a zone. I'm not focused on like a dead point, 302.36, 302.4. I'm focused on, okay, around 302, it has some buying pressure. Obviously, when it's above, it comes down buying pressure. When it came up yesterday and rejected, there's selling pressure. So once it's above, that same spot that used to be selling pressure is now going to act as buying pressure. That resistance now switches to support. So anywhere in this, I mean, let's put this line just at the fill candles, 301.75. We come to today now. We had a wick, literally 301.71. The wick hit. If I come down to the 5-minute, we'll be able to see this a little bit better. After I find the overall trend or pattern, whatever it is, I'm now on the smaller frames trying to find the day before, the week before, what's a zone that's heavy. So you see, I told you 301.75 up to 302.6. Anywhere in this zone, I want to get in. So I'm focused on that. Now my focus point is, okay, open, Netflix is up a little bit. It's at 305, 306 a share, pulls back, has support, pushes back up, pulls down, has support, pushes back up. I'm looking at the contract. My whole focal point was 310 calls. At open, those calls were at 1.9. So when the dip happened, I'm watching the contract dip. Okay, I'm watching it dip. What's the delta? I'm correlating the delta in with the actual contract price. Okay, if it drops $5 a share and the delta is 0.3, you take 5 times 30, 1.5, you subtract 1.5 from the contract, blah, blah, blah. Like, this is how I'm thinking. I've been doing this for a while. I'm thinking, what will it be if it drops this many dollars per share on the stock? So it had that double bottom, and I'm going to switch to 1 minute so it doesn't look crammed with these 5-minute candles. I don't use the 1 minute. I'm just doing this for a visual. I just want to say that so you guys know. I got to scroll all the way back now. So that 302 area, 301.70, 302.30, anywhere in that zone, I am heavily focused on. Heavily focused on. We had this double bottom, kept pushing up, double top, came back down. We had a lower low. Obviously, the double bottom did not hit dead on, but it held that level, that zone I had. When this held, I'm focused on, okay, the previous double bottom, the price of the contract, which if you remember the chart I was showing, it was like 1.3, 1.29. Now I'm looking at, okay, well, it's down to 1.15. Now it's 1.1. I pre-predicted a rough area of where this stock would, or where the contract would be if it came down below the double bottom. So like I would tell people between 1.1 and 1.2, I want to enter, because the first drop it opened, it was like 1.3. As time goes on, if a stock consolidates, those premiums for a call, they're going to lose value, even though the stock chart is not going up or down. Even if it just sits straight line, like a heart monitor, straight, like up, down, up, down, up, down, that contract is going to lose value. So you got to think about that. Just because it has a triple bottom, you don't want to enter right in at 1.3. I'm focused on, okay, it could dip maybe $15 a contract, $20 a contract. I want to get in at 1.1. It dipped enough where the low on this contract was about 1.01. So I would have entered. And of course, it took off like I figured it would. Once it broke high of the day, pre-market high, broke 308 level, broke 311. I mean, it broke out. This high that it had, I did not expect to happen. I would not have held this much unless it was a runner with me having a stop loss 50 cents below or 50% below, 100% below. I would not just hold a whole position and make 500% off this. I don't know if anyone would. I mean, if you're up 100%, you trim at least. That's just a matter of how this works. And Alex, going off your question of how would you sell, like where's your stop loss? How would you manage the risk of not losing a lot? So I'm switching back to the 5-minute now. This is what I'll do. So literally, I didn't have it charted because I was so focused on like, this is going to hold. But if it didn't hold, this is when I go back to the day before and I'm looking at the next support just below what I wanted to hold at 302. So when we had this high of the day, let me put an actual highlight right here. You want to lower risk. So my entry point was a 301.70, whatever, to like 30 302.50 a share. So that zone was my entry. Now I'm focused on what was heavy support before that level held today from the day before. Like what held after it broke above the previous high right here. It broke above this high. Obviously, it came down. It held at the open high. Basically, that's the support. So it's making a higher low right here. Breaks above the previous high. Now we have a higher high. We need a higher low to form now. Here was the low. Here's the new higher high. Where's the next higher low? That's what this is right here. This held twice for a double bottom. So my sell level going off chart only and not like, oh, I don't want to hold down 50%, whatever, going off the chart, anywhere between $300 a share and 301 basically. That is my sell level. Break and hold below, a wick below, whatever's comfortable with you. For me, I like to see it hold below on the 15-minute or the 5-minute. I want to see it hold below that level. So anywhere in this zone, I would sell around 300 a share. So my risk, this is when grease comes in play. For me personally, this is how I think. Say the delta when I entered at 1.1 was a 0.20. If we drop $2 a share, not including the gamma, not including time decay, the IV, just delta. If the delta is 0.2 and we drop $2 a share, that's $40 a contract we're going to drop. So basically in my head, my hypothetical imagination is my contract at the most is going to drop $40 a contract from my entry of 1.1. So going off the math, my sell point is going to be 0.7. Delta's 0.2, $2 share drop. My sell point is 0.7. So I'm risking basically $50 a share. Now I use that in my thoughts. If I size one contract, which is 110, can I mentally and emotionally accept the fact I'm going to lose $50 a contract if this drops down to 0.7 or $40 a contract? My bad, my math's off. I'd be losing 0.4 a contract for my sell loss. So if I'm sized, say 10 contracts, which is 1,100, I'm going to lose $400 for my mental discipline if I follow stop loss. That's where I start to put in risk into my favor. Okay, if I can't handle a $400 loss, I can't size 10 contracts. Well, what if you size 10 contracts and you don't sell at that 0.7? You just let it keep going like, oh, it's going to hold. It just wicked below. It's going to come back. What if it doesn't come back? Emotions start running. You don't know what to do. Am I going to size down? Should I just trim right now? Should I hold and see if it comes back? That's where all those emotions start coming in. If you stick to the plan, emotions are out the picture because you planned for this before even entering. You planned for this before the level actually touched. So you knew ahead of time, this contract's going to drop to 0.7. My entry is 1.1. Does that make sense? Okay, super helpful. Yeah. And I want to say one more thing just because this is always something that I struggle with. Don't focus on, I only sized one contract and it took off. I wish I would have sized more. Everyone thinks it. I know people do. I think it all the time. I sized one contract. It ran 200%. Man, if I would have sized 10 more contracts, I could have made $2,000. It doesn't matter. It literally does not matter. Because if you're wrong, the one time you size heavy, you have 5 wins back-to-back, one contract sizing. You size 10, that 6th trade. That one loss, those 5 previous wins are gone. All the money's gone. The stability with your emotions, gone. Second guessing yourself, it's back in the picture. Everything full circles when you oversize. But if you're right that one time oversizing, that next trade, I was right last time when I sized up. I'm going to size up one more time. I'm going to size up one more time. That one loss, you're wiped out, not account-wise, but mentally, emotionally. Everything is gone. And I know someone in there is thinking, man, I've had that happen. I've had 5 amazing trades. I oversized one time. I went red. I didn't want to sell early because I thought it'd come back like my previous ones. It happens. It happens to me all the time. I made that mistake yesterday. Trust me, bro. I had the same mistake today. Don't worry. Luckily, I sized light and I prepared for it. But if I would have sized heavier, because this whole month and a half previously, I've had no red trades. If I would have oversized today, I would have lost half my account. So quick. Like, don't feel bad about having to talk to someone about this. Everyone has this happen. If they don't have it happen, they're sticking to their discipline, or it's bound to happen at some point. Don't think I sized one contract at 110, like this Netflix. If say you entered at this, I bought one contract at 110. It ran to 500 a piece and I sold it 4.0. Man, if I would have sized 10, that would have been 1,000 in the 4,000. Well, what if your account's at $1,200? You just full ported and you're wrong. You have a 20% loss. Now you're down to 900. Now you're chasing. Oh, I got to get back to 1,200. I got to get back above 1,200. That's when the mental starts. It just, everything ruins. You don't focus on charts. You don't focus on anything but making money back. Like this whole idea, you got to lower risk. That's the whole topic of this whole class right now. Entries matter. FOMO cannot happen. You can't chase. That one time you're right when you chase, you're going to try it again. You're going to get destroyed the one time you're wrong. I mean, it happens. It's fine. Just don't let it repeat. Don't try and make back what you just lost when you know you made a mistake. Because the only way to make back a mistake is do it again and hope it works out. Does everyone comprehend that? Any questions, anything at all? We got 4 minutes left, but I'm going to stay after. I want to keep talking about this. I mean, the market's rough right now. If you're not trading, you're just learning, watch the market every day or recap it every night and just look at how messed up it is. Because when we get a final like bull run, a bear run, what you're seeing now, if you understand this, these bear runs are going to be so simple. Continuation, it's going to be so simple for you. Keep stop losses, not too tight, but leave them there where you know and you understand if this hits, I'm not going to be emotionally drained. I'm not going to be upset I missed out. I'm not upset the stop loss hit. Like if you prepare for this in the market we're in right now, these next few years when we finally get back on track, whether it's 2 years from now, 3 years, 4 years, bro, you are good. Yeah, I mean, Perez just said these 2 years are great teachers. Literally, if you've survived these last 2 years, and I'm not saying financially in your account survive, I'm saying you're still trying to make this work. Wait until the market is back how it was in 2019, 2020. Just wait. Just wait. Yeah, that makes sense. What are you looking for in Netflix moving forward? Ooh, so this is another thing about how I trade. The breakout I wanted happened, and I totally missed the entire move. So I don't want to try and assume this is going to keep running. So if you want, I'll give a breakdown of what I think Netflix could do these next few days. So for everyone that doesn't know, one of my favorite setups is actually a cup and handle, and I'm literally going to delete every single line on my chart right now. Okay. So we have this heavy rejection right here. Upside, cup and handle. For everyone that doesn't know what a cup and handle is, you have this consolidation, you have a major dip, you form this base, this brim at the bottom, this cup forms. Now we have the top is trying to overflow. You fill a cup up with water, it overflows eventually. This chart is on the verge of overflowing. It hit the peak, pulled back under. Hypothetically, with this pattern, if it works out, Netflix is going to break out and just totally take off on the upside. How high will it go? We don't know. But going off the chart, we have a heavy rejection right here at 322. This is when chart comes into play, not the idea of I'm going to buy and hold because it's bound to break out. Netflix can reject and it can come right back down. If that previous high of the day cannot break tomorrow, I may short it. But I don't want to just short because it touched. So this 316 level, and I'll make this line yellow. I'll make the very top, which is like the breakout. I'll make that orange because if 323 breaks out and 327, which is the day before over here had a double top basically, Netflix can have a huge bull run. But if we reject 316, if we break back inside this cup brim, which is around 313, 312, if we break back under that, the only thing holding this up is literally this area right here. Anywhere in this zone of 308. If 308 breaks on the downside, who knows how low this can go. This is when I play zones. I wait for, I'm gonna make that red. I wait for zones to touch. I watch the volume. I see if the overall volume on the day matches the average 30-day volume per day. I check the heat map. What's hot on the day? Is technology down? Is other streaming platforms down? Roku. I try and correlate stuff, even though they don't flow together. I want an overall picture. If Netflix is booming and Roku is down, Fubu's down, tech is down, where do you think people are going? They're going to find the hottest stock on the day and just pour money into it because it's hot. They don't want to put it anywhere else that's a risk. They're going to chase Netflix and pump it. Once they're up good, they're going to sell. That's when the drop happens, maybe a relief bounce after. You got to think smart. You just can't follow the candles. So literally, say this cup and handle breaks on the upside. 316 breaks tomorrow. Say 316 has a double top tomorrow and it pulls back to 313 and it starts to consolidate, volume's picking up, and it wants to curl. I'll buy calls at that level, anticipation of a breakout. I'm entering calls at a level that's lower. That way my risk is smaller. I don't want to chase calls at 316 because if it rejects and pulls back, I could be down 20% within one tick. I could be down 30% within a 5-minute ticker. I don't want to have that emotional stability of like, man, I'm down 20%, but what if it breaks out? You hear what I said? What if it breaks out? It's not, man, if the support holds here, I should buy. You know how much safer that sounds? If this support holds, I'm going to buy calls. If the support breaks, I'm going to sell right away. A breakout on the upside, if it rejects, you're holding in hope of it to go up again. Maybe this bull flag will hold and it will break on the upside. Maybe this bull flag will break out. What if that bull flag just consolidates the rest of the day? Your premium's dropping in value. The stock's not moving, but it's still strong. You know how emotional draining that is to hold something that's not moving, but you know it's going to go up. Like you're thinking, oh, it's going to go up. The minute it has a drop, oh, that IV is going to tear you apart, bro. That IV is going to destroy you. You're going to be emotional. Should I sell? Should I add? Oh, I can't do this no more. The minute you sell, watch, it's going to go right back up and break out. Wait for those supports to hold to buy calls. Look for those pullbacks. Look for the higher lows. Look for the lower highs. Look for those patterns. Look for those setups. I mean, that's literally like what I just talked to you through. I do that before every trade. What's the bigger picture? Where are the zones at? Where's the support? Where's the resistance? If I size this much, how much am I losing? Every trade I think this. I don't just, Netflix is hot. Let me buy in calls because it's going to keep going. Well, where's it at from a 4-hour time frame? Where's it at on the daily? Is it approaching a heavy support? Is it approaching a heavy rejection? I'm always on the larger frames. When I see the bigger picture, I go to the 5-minute, the 15-minute. Now I'm looking for a pinpoint entry based off those larger frame zones that I can see off these horizontal lines. Everything is pinpointed. Everything's predicted. Now I know if I enter $1,000, my risk is 20%. I'm risking $200 on $1,000 position. It's none of this crap of, oh, I'm in $1,000. I'm just going to see what happens. What are you going to do if you're down 30%? What are you going to do if you're down 50%? What are you going to do if you break on the upside 10%, but now you're at another rejection, but you don't know that because you never look back? People get so focused on these small time frames, and then when they finally sell for a loss, they zoom out and they're like, oh man, I didn't realize there was a support right there. Like I shouldn't have gotten puts this low. Like process everything, plan this, like really think about what you're trying to do when you enter a trade. Like what's the plan? What's the breakdown? But yeah, I mean, it was mostly ranting I just did right there, but like hopefully this breakdown summed up, like you want to make risk so small. You want to plan, journal after you're done with stuff, write your emotions down. Like, how did it feel sizing more than usual? Would it have been better if I sized one contract so I knew like my risk is so small, I can hold this to zero and just smile about it? Most of my trades, when I'm down 80%, I'm sitting here just smiling like, man, it's still holding the zone. Like, I sized for zero. Like, I'm not that worried. Like, it's a great feeling to lose and still be happy. A lot of people can't say that. Does anyone have any comments, questions? I want to try and answer some stuff people have just to see. You're on a 30-minute time frame right now. Is that the large enough time frame for the bigger picture? So the bigger picture, honestly, it all depends on like what's happening on the chart. So let me I have a really good example I'm going to pull up with the energy sector real quick. Thanks for bringing that up, bro. I appreciate that because that's actually something really good. No, take over the chat because your question may have been someone else's. You never know. You guys are going to see how I do all my sectors and everything too while I skim through these watch lists. Okay, energy sector. So look, I'm on the 4-hour right now. I'm zooming out all the way. I don't see nothing, man. Let me go to the daily. Okay, we're at a trend. Like we broke through this support trend. We're trying to push back up. Let me go to the weekly now. Okay, so look, the weekly is kind of chilling. We're doing this whole thing. So I'm going to switch to the monthly now. Look at the larger picture on this. This is the monthly time frame. Look at this triple top on this rising trend line for rejection. Look at this. Does this answer your question a little bit? Like how far do you have to go? It all depends on the stock or the index you're looking at. For this XLE, the energy sector, the monthly time frame, like I was watching this November, December, January, February. We were not breaking above this on the monthly. So I knew energy may hit a point where we have to drop. So if we switch over to ExxonMobil now, which that's the only stock I look at in the energy sector, let me pull up this stock real quick. So we're on the monthly, obviously. Looking at the monthly, there's not much to see here. I mean, we're way up. So at this point, we got to drop it down. What's the weekly look like? Okay, the weekly's just chilling. We already know what happens back here. None of this matters because it's way below where we currently are. So we need a bigger picture of just this zone right here. Because the previous high with the trends was way back here at like 68 a share and 70 a share. So none of the stuff back there matters right now. At this point, I'm going to the daily. Okay, this looks kind of iffy. I'm going to go to the 4-hour. Like, you see how I'm doing this? I'm finding if anything historically lines up with where we currently are. Because if you're on the monthly for ExxonMobil, None of this stuff back here matters. None of this 68 a share matters until we finally break 90 a share, 85 a share, 80 a share. None of this matters. So you want to be on the smaller frames at this point. And looking at ExxonMobil, it's the daily and the 4 hour that matters. So looking at this, I'll put a line here at this high that happened randomly, drop back down, finally it broke above. Then we had major support at that same rejection in the past right here. Now we're at support. Recently, in the past few days, we broke below this support. Now we're trying to push back up. So my speculation when I look at this, I'm going to go to the 4 hour now because I know this line historically had a rejection at resistance. When it finally broke above, now it's trying to hold support right here when it came back down. Does that make sense? So we're holding support. Now that we finally broke below with ExxonMobil, if this pushes back up and rejects the 102 area, 103 a share, you could get puts with time and ride this down. But if it breaks above this support and now it's it breaks above the resistance and now it's support underneath, this could bounce and just take off to new highs if the energy sector can stay hot. This is literally how I look at plays. I don't look at, oh, let's check the 15-minute on ExxonMobil. Oh, we're in a downtrend. I'm just going to play puts if we push. Act like this line's not here. On the smaller frames, literally all you can chart is just this right here. Let me get my trend line going. There's a trend just kind of in this area. So a push back up to here, you can short or get puts around here if it historically follows this falling trend. So going off this trend I just put, let's go back to the daily now, or the 4 hour, I should say. So we're looking at the 4 hour, and we had this support, which you guys just saw me do earlier. So I'll put a line around 102.38. So look, we have to break past this zone. Then we have this trend on the upside. So we have two different areas that we could short this. If we break above the 102, this trend line historically has rejected. Does this make sense? So we have two areas within a $4 increment on the stock, if not $2 increment of a short for a put. So if we break out above 102 and hit 104 in one day, buy puts with time, buy one contract and see if it rejects like it has the last few times when it hit this trend. See if it falls back down. I mean, it could be a safe trade. You never know. Hopefully that answered your question. Like when you said that, my mindset was like, oh, energy sector. I just looked at this last week. The monthly had a rejection with the triple top on the rising trend. That was a perfect example with that question you asked, I feel like. Does anyone else have any questions at all? Anything, comments, concerns? Now's the time to ask. I'm going to wait a few seconds just to see if anyone has something to say. Hey, and Alex, don't feel like questions are a bad thing. Because I promise you, someone out there wants to ask something, they're holding back because they don't want to sound stupid. They don't want to sound like they're needy. Ask any question right now. Because I promise you, when I hang up, you're going to be thinking, man, I should ask that question. What factors are you looking at to choose the right strike price? That's perfect. Okay. Let's go to Netflix. I'll just do the same example since I broke this down pretty well. And let me put this line back from the previous day just so it's there. And then let me, okay. So I'm focused on like pre-market high, pre-market low, a zone after market opens that it could hold on. So it's obviously today's Thursday. We don't have much time for contracts to, well, not contract, but for share prices to move a lot. I've traded Netflix enough in the past that I know a $10 move, a $20 move in one day, it's not abnormal. I mean, I've seen Netflix go $30, $25 before noon before. So going off just what I know from my knowledge, with a dip down to 302, the contract being 310 is an $8 push. And when Netflix had that drop, I think it was down like maybe $2.50 on the day. So it was red. The overall stock was red. So only if Netflix closed green on the day, it would have to go back to 305, basically 305 a share. So right away, I know 302 is my entry, 301 is my entry for calls, $3 push. I'm going to make money even if Netflix only goes green slightly on the day. Obviously, with what you see now, it finished 2% up, $6 on the day. From low on the day to high, it moved $14. So I'm looking at this, okay, psychological, 305, that's not really a psychological contract price, 310. People will chase a 310 contract as they see Netflix pushing 305, 306, 307. 320 is a psychological, but is that a big enough move to have on a week of contract? Let's see what 320 call is looking like for next week expo. Can I afford that contract price? That's when the breakdown comes in. You want to focus on, okay, I've seen Netflix move big in one day, but can it really hit 320 this week? Because if it consolidates and doesn't move, that contract's toast, bro. You're gonna be down 60% on it in one day, probably. So that's when the whole idea of expirations, the actual stock price move on the day, like what's actually going to happen. Is there any favor in your entry where you want to get in? You have to think about this before you enter, because you can't just be all, oh, Netflix is holding 302. I'm gonna buy a 350 call for next week. Like, what do you like? I get it's cheap, but what's the chance of it moving to 350 by next week? Yes, it can happen, but think logically. Don't have that hope of, oh, if this moves big, oh, I'm making 1,000%. I mean, just today, a 310 call went 500. Like, so I'm thinking, okay, I know how Netflix moves. This is one of my stocks I watch every day. If I'm looking at a stock like, I mean, just a random stock, what's some I don't trade? American Airlines. I don't know how it moves. I have an idea, but I haven't traded in months. I don't know if it can move $2 in a day anymore. Because when I used to trade it, it would move $5. It'd be up 9% in one day. I don't know if it can do that anymore because I haven't been looking at it. So you have to find a stock that you know, okay, I know this can move heavy. I know Tesla's push $20 in a day. If it has volume and it breaks out, it can push another $10. If you're trading, let's say Amazon, okay, when it hits this 98 area, it usually rejects a little bit. It doesn't push up to $100 a share very easily. You're not going to buy a contract that's $4 out the money, $5 out the money. You're going to play right at the money probably. Does that answer your question a little bit? I mean, it's all about your knowledge and how you know stocks move. You can't just buy something because, oh, it's cheap and it can move. Oh, it's cheap. If this happens, I can make 1,000%. I can make 100%. Closer you are to in the money, the contract will not get burned if it does not move on the stock chart. I mean, you just got to be smart. You got to be smart. Hey, Alex, come on. I know you got something. Let me hear one more question, bud. I'm processing. But yeah, anyone else, if you got questions, let me know. If not, when I do end this, put them in the chat. Like, even if you want to DM me, send me a DM on Discord. I would prefer if it was in the actual Discord conversation, because other people, I know people have questions they're going to have tomorrow or the next day or next week that they want to ask. If you have a question randomly at 2 a.m. in the morning, just send it. You'd be surprised how much I don't sleep. Just send questions. You're good. Because I'm gonna end this recording right here, and I'm gonna stay for a little bit longer just to answer any more questions. I don't want this to go too long. So I'm gonna stop sharing my screen.